Welcome back. You're tuned in to Chartbusters here on CNBC TV 18. Well, that's promised. Let's get straight to the management of Jindal Stainless. Well, they reported a rather good set of numbers in the first quarter of this fiscal. Remember, now they're reporting it as a consolidated entity. Revenues are up by close to 25%. The company also saw margins expand a little bit. And if we just take a look at that chart, the stock is up close to 20% in the last 1 month, and it's making yet another fresh 52-week high. We're joined by Mr. Anurag Mantri, who is the Group Chief Financial Officer on the show. Hi, Mr. Mantri. Good morning. Thanks so much for joining in. Well, let's get a couple of basic numbers out first. Last time you joined us, you said that volumes are likely to go up by close to around 20%, and your EBITDA per ton range will be 19,000 to 21,000 odd. Do you want to revise the volume number given that the first quarter has been very, very strong? And also now, are you leaning towards 19 or 21,000?
Okay, thanks, Nigel. Actually, we just gave this guidance 2 months back, and not much has changed in terms of the external environment in the export market as well as in the domestic market. In fact, rather we are seeing some of the downward pressure in the European market. Despite that, all these challenges, we are still maintaining our guidance of 19 to 21,000. This quarter we delivered 20,000, so we expect to similar sort of run rate, but we are guidance-wise we are keeping it 19 to 21,000 of EBITDA per ton. Volume-wise, we are now obviously confident with the 20% volume growth which we guided for this fiscal year over the last fiscal. So that we are maintaining the guidance as it is.
So you're maintaining both your volume as well as the EBITDA per ton guidance. You said not much has changed, but potentially things could change, and this is with regards to exports. We are understanding that US may take off the Section 232 duties, as a result of which there is a higher possibility of you exporting to the US. Could you give us a sense of how much of your overall exports go to the US and how much can they increase post this?
So last quarter, the US export was not much. It was just 8%. At one point of time, maybe four, 5 quarters away, our US export share was almost reached to 25 to 30%. So if any changes happens on this, there could be a potential positive side to the US exports, because right now our export to the US market is 8% and other geographies are actually much higher than the US. And if any potential uptakes happens in the US market, we will surely be tapping those opportunities.
And exports is a better margin business?
I would say because our export is into the very high quality segment. So on a blended basis, on the export side, we only send the very high quality material and high end, which goes into the various high end segments. Therefore, the blended margin of export, otherwise the margins on the export and domestic market generally in the product to product wise remains same, but it's almost a question of the blended product mix.
Okay, all right. What about JUSL, the acquisition you'll have completed out there? Last year you did a bit of close to around 700 crores. I think the last time we chatted, you were talking about doing a number of around 800 crores. What can you do on JUSL in terms of an EBITDA performance for this year?
So JUSL this year EBITDA, we are guiding that at least 800 crores EBITDA we should be able to achieve in JUSL. With this, the guidance, if I say EBITDA per ton guidance of JSL, which was 19 to 21,000, including JUSL, that will go by another 3,000. So we can run to a EBITDA guidance of combined entity 22 to 23,000.
Okay. All right.
We'll ask you to just hold on to that thought, and we'll come back to you in a minute because those are Nestle's numbers at the bottom of your screen, and they look like a strong set. Definitely at the bottom line, it's been a mild beat, but on the top line as well, it looks like the numbers have seen a 12% plus sort of revenue growth, as a result of which we've seen a bit of an uptick on the stock. Okay, 4,658 crores on the top line and 698 crores on the bottom line, largely in line, marginally better than
Nestle. Let's get back to the conversation we were having with Mr. Mantri of Jindal Stainless. Apologies, Mr. Mantri. Results are flowing in thick and fast, so we need to address a couple of those numbers. But, we were having that conversation, and JUSL, if I got that number correct, you were saying that it'll do close to 800 crores of EBITDA for this year, right?
Yes.
And on a per ton basis, you were talking about 3,000 rupees per ton. That is for this unit itself.
For this unit, the EBITDA per ton will be around close to 3,500 rupees EBITDA per ton. on a
Okay.
consolidated volume of Jindal Stainless, which will get converted into around 3,000 rupees of EBITDA per ton.
Got it. All right. Also the other point is on the debt portion. Now you have your standalone debt, subsidiaries, and now you have JUSL as well. So the last count that I have it's more than 5,000 crores. Could you tell us what is the trajectory on the debt and what is the capex plan you have lined out for this year itself?
Okay, so this year capex plan last time what we talked about is around 2,500 to 2,600 CR.
Yes.
Some of the capex like the nickel investment in Indonesia and our renewable investment with Renew Power, which we have signed, the equity infusion toward that, all these will be preponed. Probably we are expecting to get preponed because these projects are moving at a faster pace, including Indonesia project. So we expect this year capex to be around 3,000 crore in JSL, and there is another capex outstanding for JUSL around 250 crore. So the capex number of JSL plus JUSL will be around 3,200 to 3,300 crore in this year. The JSL plus JUSL combined debt today at the quarter end was around 4,904 crore. So this debt could go up by another 450 crore. So because we have a capex lined up, which will largely be funded from internal accrual, but there could be a marginal increase in the debt of 450 crore, 400 to 500 crore at the end of the year.
And debt peaks out at around 5,500 crores. You don't see it increasing beyond that, right? For now, at least.
Yeah, 5,000, not more than even 5,400 crore, I would say.
All right, not more than 5,400 crores. And what happens to the dividend? Because, this year you gave a dividend after, 15 years. Will it be consistent now, and should shareholders expect a dividend this year as well?
So our board has approved a clear dividend policy that approximate in a gradual manner will reach to 20% of the PAT level of the dividend payout. And we will continue our capital allocation accordingly, and we'll gradually move towards this. So till the time, obviously, with good performance and all this thing, in line with the PAT, we will continue to, board will continue to consider the dividend appropriately.
Okay. All right. Mr. Mantri, everything's looking good, and the stock market as well is very happy with the numbers you're putting out. But we need to highlight a couple of risks as well that we hear about. I understand that the promoter entity, they could be looking at setting up even a steel plant. Now, the street is a little bit cautious that why are they going that road, and will JSL Stainless have any role to play out there? I wanted your view on this. Have you heard anything with regard to the promoter entity's plans of getting into a steel plant, and will it have an impact on the listed entity?
Let me first clarify, the listed entity has nothing to do with that at all, and there is no funding and no cross holdings of Jindal Stainless into any of the steel business at all. The promoter focus, as for our understanding, is very clear also, is that that's a stainless product to have on a stainless steel business. That plant is a very small fund, more for the balancing, because they had other equipment like coke oven and other facilities available. So it was more a very minor capex. They could actually do the balancing towards that. So it's more towards that. It's not, as far as I understand, it's not the idea to go to the steel business. And Jindal Stainless will remain focused on stainless steel, and promoter will be, I think, are committed for stainless steel business.
And the promoter pledge, I mean, there is 77.5% of their stake. They own close to 58% stake in the company. Is there a risk to that? Are the promoters comfortable with it? Is there a plan for deleveraging that or depledging that?
Okay, good question, Mangalam. I think one is that I must clarify, this promoter pledge has no additional leverage at promoter level. The pledge have been given only for the company's working capital side. In fact, on side lenders have already removed, and working capital side also the lenders have made good progress. I think by within next 2 to 3 months we should complete this process also, because the rating of Jindal Stainless is AA range. So I think they are very well comfortable. It's more a process issue. There is no additional leverage. All this debt is pledge is only for company's working capital, not for additional leverage.
All right. So you have clarified that there's no risk in terms of supply that can hit the market. But just wanted to ask you, do they have plans of releasing this pledge, at least from a stock market perspective? Normally an investor doesn't want to see the promoter's shares pledged. Is that the plan, or you're comfortable with how things stand?
Oh, no, absolutely right. We have taken up strongly with the banks, and banks are also very supportive. I think within few months, I think we should get this sorted out with the lenders, and we should see a positive development towards it.
We say this largely because, a lot of the pledge is related to the way the stock price has moved as well. And in the last 12 months, the stock price has increased by about 200%. And despite that, there hasn't been any revocation of the pledge itself or release in the pledge. So this is something that the street will monitor. But thank you so much. Go ahead. You were saying something.
Last message on this promoter pledge. So these are not linked at all with any of the market price linked. There's no markup. Is that so? There's no risk of any of these supplies hitting the market, and we are working to get it released faster.
Got it. All right, Mr. Mantri, we take that clarification on board for the time being. Congratulations on a very, very good set of numbers, and thanks for clearing out a lot of those doubts as well. We'll slip into a short break on that note, come back, and we'll get you more updates on the markets.